Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News 9 where we break down the day's action on the Lal Street. And Indian markets, they extended their losing streak to 4 sessions on Thursday as Nifty broke below some of its key support levels to end with a cut of 0.7%. Overall, if you look at it, it was a session of two halves. The market kicked off the day in the green with the 50-share index even opening above 22,200 levels and even going on to scale 22,300 in the morning to mid-morning trade. But something interesting happened around the 1:27 p.m. mark. The index in a matter of 2 minutes dropped over 180 points. That's a cut of 0.8%. I mean, bulls did try to arrest this fall, but to no avail, and we continued to correct from there on and even fell below 22,000 for the first time in this financial year. In the 4-day correction, the index has now fallen close to about 780 points from the peak, or about 3.4%. Now, if you'd recall, in the morning we had said that Nifty needs to defend 22,117 levels, and it was important for two reasons. One, it was it coincided with the record high for Nifty in January, and second, 22,117 also coincided with the 61.8% retracement level of this entire rally from March low of 21,710 to the recent record high of 22,775. Now that becomes the first hurdle that we need to take out on the upside. Beyond that, the 40-day exponential moving average, which now sits at 22,191, could also come into play. On the downside, first support for the index should come around the 21,938 mark, which is nothing but the 78.6% retracement level, followed by the March low of 21,710. I think the big support for the index in this recent correction should be that 21,710 mark. We are about almost 270-80 points away from those levels. So keep an eye out on that, because the move on the markets overall has been rather strong, and you can just see in the matter of just 4 days we have corrected almost 800 points. But moving on to the broader markets, they also succumbed to profit taking in the afternoon session. The mid-cap index, which was, remember, in the morning up nearly 1%, fell over 700 points from its intraday high to close with a cut of 0.5%, even ending below the 49,000 mark. The action in the small cap index was similar. It opened a percent higher, but fell over 250 points from the top to end down about 0.3%. Among the major drags on the market today was the large private banks. In fact, if you look at today's price action, HDFC Bank, Axis Bank and ICICI alone were responsible for about 1/3 of Nifty's entire fall. Nifty Bank, as a result, also ended at its lowest level in this financial year, but still managed to defend that 47,000 mark on a closing basis, and that is a very key support for the index. So keep an eye out on that. We have just closed marginally above it, just 60-70 points above it, but 47,000 on Nifty Bank is key to track. But joining us on the show now is Avinash Gorakshakar, Director of Research at Profit Mart Securities. Sir, thank you for giving us time here on News 9. And I want to begin by asking about the session. At one point, Nifty around that 130 mark, in just 2 minutes, Nifty gave up close to 180 points. What do you think led to that sort of a sharp flash crash?
I think, Suyash, this is really the nature of volatility in the market, and I think you must be aware that tomorrow the first schedule for election starts. That is 19th of April, and I think markets are facing two major challenges. One is the weakening rupee. If you see the rupee movement, the rupee has significantly depreciated against the US dollar, and if that continues for a longer period, then I think markets are not going to take it positively. Secondly, FIs have been selling relentlessly. In the last 8 to 10 days, we have seen FIs sell, in the cash market to the tune of almost 8 to 10,000 crores. In fact, today's number also could come in the negative. So I think, markets are definitely in a very wobbly zone. There is going to be increased volatility, and this is earnings season. So I think, markets are also discounting the fact that wherever earnings commentaries are not up to expectations, where there are major disappointments, you could expect a major sell-off in a very short period of time. So today, classically, as you rightly mentioned, Suyash, the market was of two halves. The first half, the market was quite buoyant. The second half, we saw relentlessly selling. So I think now this is going to be a part and parcel of the market. I think index is going to see a lot of volatility in the coming weeks as we proceed into the election schedule. But I think stock specific, I think we could see good opportunities coming out, good companies with good commentaries, with good financial numbers, scalable businesses. I think if they are available at decent, attractive valuations, risk averse investors could definitely look at, such kind of opportunities. But broadly, the market opportunity, the market movement, as far as the index is concerned, is going to be extremely volatile. And I don't think this is going to change in the near term. We are going to see a lot of volatility. So this movement which you saw today is just a trailer. The full picture is yet to come out.
All right, interesting comments coming from you, sir. But as you rightly pointed out, we have enough and more reasons to worry about. The election season kickstarts tomorrow, the first phase of polling, and we also are in the midst of the earnings season. Also, the tension in West Asia is also, adding to that jitteriness in the market. So overall, in the worst case scenario, how much more can we correct from here on?
I think, Suresh, that is a very difficult question to answer. But my sense is that, I think if at all crude goes above $100 a barrel, then I think that is definitely going to be a severe negative. And I think we don't know what is exactly going to happen between Israel and Iran. But typically, I think if any escalation of geopolitical conditions do happen, then I think the entire Middle East segment is going to be impacted, and that is going to actually result in a little slightly problematic situation for us. Already a weak rupee is not good for the Indian economy, because a weaker rupee actually makes our balance of payments a little more expensive. So I would believe that we'll have to wait and watch as to how things percolate. But I think if the market comes down, I think 8 to 10% is what I think possibly we could see further downside. So I think without giving a number, 8 to 10% is the maximum support area which I think.
All right, 8 to 10% correction could be in the offing for Nifty. But sir, you mentioned crude, and something very interesting happened as far as crude prices are concerned in the last couple of sessions. Brent crude in fact slipped by about 3% since Tuesday. And I mean, it looks like the lack of news coming out from West Asia is actually being perceived as good news. By the market in general. What's your take? Why did we see that 3%, 4% crash in crude prices, sir?
No, I think, markets seem to be realizing that at least as of now, there is no significant escalation, from either side. But, let me tell you one thing, that Israel is not going to sit quiet. I mean, if they do announce some aggressive plans of another attack, that is again going to make crude prices spike up again. So my sense is that, it's going to be a very delicate situation as of now. So I think 3% fall today is not going to be something which is going to be rejoiced by the market for a long time. We'll have to wait and watch how geopolitical developments take place. And I think as and how the market goes forward, the geopolitical situation seems to be quite delicate. In fact, in the Middle East, people are apprehensive that any further escalation would actually mean a little bit of more trouble for the entire region going forward. So I think we'll have to wait and watch. Let's wait and watch, but I think around $95 or $96 a barrel is definitely not good news for a country like India, because it actually upsets our balance of payments quite severely.
And I also wanted to get your view on Mr. Powell and his sudden shift in stance. I mean, he has signaled perhaps a delay in rate cuts after a series of high inflation data that came out recently. I mean, 6 data points came out since a month ago when Fed last had its policy meet, and all of them were ahead of expectations. I mean, from expectations of 3 cuts this year, we are down to 2 or maybe 1, and some are even saying that we may not see a rate cut at all this year. What are your thoughts on this?
No, I think, Suresh, I think, inflation seems to be a very sticky subject in the US. And I think Mr. Powell is very clear that unless inflation comes down to levels of around 2%, which is their comfort level, a rate cut is completely ruled out. And I think, markets were exorbitant. I think they were very jubilant in saying that, 3, 4 rate cuts could come in. But I think now reality has started sinking in. And I think the markets will obviously factor in this now going forward. I think the latest what I heard is that the interest cut rate could come in at the time of the US presidential elections, and that is some time away. So I think to that extent, what is really negative for our markets is that possibly RBI would also put, rate cuts on hold. We'll also have to wait for some more time before we see the interest cut rate cycle happening here also. So my sense is, I think we'll have to wait and watch how inflation, matters. because once the rate cycle starts, then I think it's going to accelerate downside on a very good note. But for that to happen, maybe we'll have to wait for at least 3-4 months and then see how macros develop.
All right. And, do you think that in this current scenario that we are in, are high rates inflationary? I mean, I ask this because some economists have opined that high rates are actually fueling growth and inflation rather than holding them back. What's your thought on this?
No, I think typically, when there is high inflation, growth is also equally aggressive and faster. So there's no doubt about it. But on the economy side, I think, softening of inflation is very important because affordability is very important. I think high inflation is actually not good for many sectors, and I think that actually curtails demand. So my sense is that, from a macro perspective, inflation needs to come down, and I think that would make obviously, essential prices of essential commodities, essential goods and services also become more reasonable. So I think apart from the growth fact, I think there are many social issues where the government would like to ensure that prices are kept under control. So if we have a good monsoon, Suresh, hopefully I believe food prices will be under control, and that will be a big lever for bringing down the food inflation part, which is an essential element of the overall WPI index.
All right, and food inflation has been a problem, but the commentary that is coming out from SkyMet as well as IMD, I mean, they are expecting a normal season this time around, so that should perhaps prop up the rural demand as well, because that of course has been a pain point for the markets overall in India. But we'll move on. Vodafone Idea's 18,000 crore public offer, follow-on public offer, has opened for subscription today. Now, according to the recent comments from the management, the company intends to allocate more than 2/3 of the total fund raised towards capital expenditure to bolster its network infrastructure and expand its market presence. As per the recent interview from CEO Akshay Mundra, the amount will be split between the company's 5G rollout and 4G expansion. Rupees 5,720 crore are earmarked, will be used in the 5G rollout, while the 4G investment of about 7,000 crore will be roughly split between 4G coverage expansion and 4G capacity growth. But coming back to the FPO, sir, what are your advice to the client? Are you advising them to subscribe to this issue?
Yeah, I think, Suresh, my guess is that at 11 rupees, there's nothing much to lose. But on the listing side, investors who want to have a short-term, listing kind of gain approach, I don't think there's anything left on the table, because the biggest negative Vodafone has is that despite ARPUs going up, they've been losing a lot of customers, their subscribers to Bharti as well as Jio. And I think this trend is continuing for a very long time. So I would not suggest anybody to subscribe to the issue purely for listing gains. But yes, if somebody were to look at the next couple of years, hopefully if things happen positively, their subscriber base increases, they are able to generate higher revenue from 5G sales, then I think this price definitely has got a lot of value. But over the next, say, couple of years, from a listing gain, I think it should be avoided. Somebody wants a short-term buck, should not subscribe. But longer term, yes, at this price, there could be good value. And I think the better part is that a lot of marquee names have entered this FPO. So let's wait and watch. The numbers have to improve. I think without improvement in their cash flows and the reduction in debt, I think it seems to be a little difficult task, but we'll have to wait and watch.
All right, don't subscribe to the FPO if you are looking for listing gains, but the long-term view, I mean, there is enough and more questions that need to be answered as far as Vodafone Idea is concerned. But before we let you go, sir, the election season is here. The first phase of polling begins tomorrow. What is your advice for the investors for the next couple of months? I mean, considering that the markets have corrected, should they, deploy their money in tranches along the way, or for the risk averse, it's time to perhaps wait and watch till June 4th?
No, I think, see, my guess is if you have a reasonable risk appetite, you could actually start investing in tranches, because this is the best time when you get good quality businesses at lower prices because of volatility, because of negative sentiments. I think you need to select good businesses and good scalable kind of businesses with good competent promoters. I would not be surprised that assuming 4th June the BJP government gets more than 400 seats, that could mean that the market could take off. But on the other hand, if they get something like 350 seats, we could see a temporary kind of knee-jerk correction also in the market. So I think longer term, this is a good time to invest in good quality companies, but I think in tranches.
All right, invest in good quality company in tranches. That's a word coming in from Mr. Avinash Gorakhshankar. Sir, appreciate your time and your thoughts. Always great insights from you. But with that, it's a wrap on this edition of Last Tick. We'll see you at 9:45 a.m. on First Tick. But coming up next is Business Plus.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on four wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.